Hello, my name is Darika Isakova on InstaForex TV with recent Forex news. The chairman of the Federal Reserve System, Ben Bernanke, announced on Monday that soap bubbles problem in the market still remains the most essential for the authorities, though at present there are any events in the US markets which cause concerns. The FRS had mentioned a very complicated situation, what the government should do if the asset market seems to move another way than it was expected according to the macroeconomic data. As it was already said by Bernanke and other reserve system representatives, the soap bubbles in the asset market is a very serious problem, and it is extremely hard to determine when the market lost its course. As explained by Bernanke, it is possible to handle the bubbles raising the interest rates, which are at a record low at the moment. However, he added that it is necessary to use the right work tool, and perhaps it would be better to monitor the asset markets by means of the banking system and regulatory authorities. Bernanke comments regarding the soap bubbles in the market were sounded at the same time when there emerged concerns that too smooth monetary policy can create conditions for new bubbles. In his speech, the FRS chairman made cases which must come to knowledge for the most market participants. He pointed to that the minimal inflation threat combined with labor market problems and flat economic upswing means that the Federal Reserve System is not going to upvalue the interest rates. The FRS still expects that the economic condition will possibly require low federal fund rates during a long-term period. Economic advance is likely to extend next year, but some difficulties, especially tight bank lending and weak labor market, don't allow a sharp growth as the reserve system wants it to be. Unexpectedly, Bernanke came out for the dollar, which has been under strong pressure recently, saying that striving to hold the inflation at stable rate and growth promotion can serve for the dollar to be steady. Most observers consider that the current economic condition and its possible development in the coming months will be restrained by the FRS not to force up the interest rates till the middle of the next year. The expert focus show that the current level of key rate may remain during the whole year of 2010, just because the Federal Reserve will not have a substantial inflation threat. It was Forex News provided to you by InstaForex News team. Thank you for watching us and goodbye.